Cool. All right, we are recording. Everybody, good morning and welcome to the morning volatility report. Is VIX and oil breaking up? So we were talking a little bit about the connection between the oil and the S&P 500, which seems like it is going to be connected until it is not. What we're saying though is VIX at this level and volatility at this level seems to be pricing what oil is, meaning oil can go down and the VIX is 23 and it's going to be hard for volatility to keep rising unless the market really sells off. Okay? But what we're looking at is I think the market's getting used to the fact that we're going to stay in this sort of volatile area for a while. I guess that's the takeaway from that, and I don't really see any change in that. So, we had a little rally this morning. I'm not quite sure what the overnight was pretty awful as far as sell-off goes, and by things started to ride a little bit. We had decent housing news. There it looked like there could be some potential for I don't know, maybe rates aren't going to get raised as fast as we thought, but whatever the trend here for oil is, and I'm going to pull up, let's see, the tick chart for this second. Is, and you have to be realistic about this. Not much has changed here in the oil space, right? So, all the problems of oversupply are still there. Nothing's changed. I'm also looking at the futures and VIX. We're not quite, everything seems to be moving up just a little bit. And even with the market unchanged, you have the cash down a little bit. The vol products, if you look at UVXY, VXX, really they're not really responding. The futures are not responding what we'd say I would call like in a positive way. So they're all very flattish with a slight bid, and it almost feels like the next shoe to drop. There was a couple good earnings out, and we're looking for basically the big technology earnings coming out. We got Apple this afternoon, and I think that's going to help determine. So we need a counterforce to basically China is imploding continually. It's not going away. As far as their equity market goes, and oil weakness right now is getting everybody sad. Now, all I know is in the 90s, oil was like $20 a barrel and nobody cared. And you had the internet boom and technology kind of led the way. And commodities were the best, it was, I guess, the bottom of all bottoms for that commodity cycle. It could happen again. We've sold off from the highs, but you need to look at the earnings growth of Apple, Google, Microsoft, Facebook. If those companies can continue to grow earnings, that could be a slight counterforce to everything going on in commodities and oil. The banks also have just gotten weaker on, I think Fed possibility of the no raise. There was a little bit of bid for banks, and then it seems to have faded. So also what that could do is it could lock our market up, meaning we're going to stay at a higher vol, VIX in the 20s, because the overnight 1 to 1.5% moves is going to keep VIX in the 20s. And, maybe intraday trades, some flies. Again, I'm looking at time for an iron condor. Maybe again, we'll look at it again today. It's just trades like that where you're looking away from sort of what the market is doing more near the money and trying to catch what it might be doing out of the money. At least from a broad market point of view. I think also trades that are short oil but long something else also could work out okay. We just have to we've looked at a couple things last week, and I'd like to look at more today. But the reality is, until the fixed futures come out of backwardation, we're still seeing, let's say, 23.70 for cash. And as I look at it now, we are still, okay, we're still here. This is the market. It's almost like we're used to the market being in this state of backwardation, which basically says anything's going to happen. Anything can happen tomorrow. right? Not only is anything going to happen, but it's likely to happen, right? We're likely to move 1.5% every day still. And it's not going away. So you have to have whatever you trade has to take that into account. What we're not getting is the rallies we're having, since there really is no conclusion to the volatility. The rallies we're getting are, you're not getting over 1900 for very long. We're certainly not getting back to 2000 anytime soon because we need a reason. And all the QE stuff, I think, is now dead. As far as it does take the algos, all the machine readable news type trades do pull things up. However, it doesn't give us very much. The rallies aren't sustained. And they all look like good fade points, to be honest. So until we have what I think would help things or right the ship somewhat is a good slew of technology results. If we don't get those, I think we'll probably end up retesting our lows. And that's what we got. So I'm basically planning to that effect. All right, everybody, have a good day. Wish we had a rosier volatility report, but that's kind of what we've got, right? And it's not going away anytime soon. All right, everybody, bye-bye.